Hello traders, Gary Wagner here for Trending Markets. It is Monday, 10th day of August 2015, just after 10:30 in Honolulu, 4:30 in New York. The equities markets have closed for the day, and they have closed with triple-digit advances in the Dow Jones Industrial Average, moving up over 200 points, 241 plus points to be exact, a move of almost 1.5%, 17,615. That is our effective close on the day. You can see that in the Standard & Poor's, this being the E-mini. E-mini up about 26 points, 1.27% higher on the day. First, I do want to take a look at the Dow Jones Industrial Average, and we have been really looking at a basic channel line. This channel line has been developed by looking at a 480-minute chart, Japanese average format, and you can really see in terms of a Japanese average format, this is when you're not going to see the full extent of the kind of move that we did witness today. You can see that right here, but what I do find very, very noteworthy is we did come in, we tested the low, we made an observation just last week that really for the first time that we've really been following this, it was unable to make it to the top of the channel, began to trade back lower, and then the comment that we had back on Friday, just prior to this weekend coming in and this tremendous move to the upside, was whether or not we would see a follow through. In other words, whether or not we would see it continue to trade in this channel line and then begin to move up, or if we were going to see for the first time this market really break below the channel line. Well, I'm glad to report that it has moved back into our channel, the upward level of it, and you can really see that the market did bottom right at the lows of this channel and does appear as though it is moving back higher. Now, traders, you know that we typically look at this through the eyes of a Japanese average chart, and the key distinction, of course, is that an average chart pegs the open as the midpoint of the prior candle. In this case, we've got 480 minutes as each candle. You can really see the kind of move that we witnessed and where this market went to when we convert this to a standard candlestick chart, and that's just what we've done. When we look at this chart, you absolutely have a three-river morning star in terms of a candlestick pattern itself. You can see how eloquently the low itself does match with the bottom of this channel and our effective close on a standard candlestick chart. Of course, you saw how small-bodied that candle was when we had it in Japanese average format, but it has an effective close above this point. So, will we see follow-through? My sense is we probably will, and my sense is that this market is probably, in most likelihood, going to head higher over the next couple of weeks. Next, I do want to take a look at crude oil. Crude oil did reach those 43 numbers we were looking at. Even though it was in the high 43s, we did see 43 as a number that popped up as recently as just this Friday. That might have been the low in the market. That was the point that we were looking for oil to go to. Whether or not we see this market kind of bounce back up and then drift back lower, or if we found a tentative bottom, is something that we'll really be able to really observe and formulate a good strategy based upon how it trades over the next couple of days. We're looking at our weekly chart. It's a longer term look at the market. It is also in Japanese average format, so we're not getting our true open and close on this. You can see this is at 44.23 when the market's actually trading more at 45 today. Or excuse me, 44.96, 44.90s in that area, and that's because it has an open and close, as I said, that really is based upon midpoints rather than true opens and closes in the market. But we did hit our numbers. When you look at the lows, those lows came right in at the area that we were looking at. And if we see some real support, we could get a bounce in here, and that bounce would be a good short-term upside trade. In other words, we would go long in this market. If in fact that is what we were looking for it to do, I would expect some resistance to come in roughly at this 50%, which is roughly 52.50 per barrel. Now, as far as the currencies are going, they are not moving in what I believe is their primary direction. We do have corrective moves in the market in both the euro as well as the dollar. Dollar trading off about 1/3%. So actually fairly quiet, 97.19. We're in at 67. Our stops are at 96.25. I want to watch this very, very closely because if we do see some sort of key reversal in this market, we'll pull the trade as it is. But as of right now, we're currently trading 97.19. Our stops 96.25. When we look at the euro's trading at around 110.20, call it 110.17 to 110.19 in that area. When we look at the highs and the lows, the high has been 110.41, the low 109.25. We'll maintain these positions and see how they unfold over the next couple of days. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow on Tuesday for another Trending Markets. Bye-bye.